Honestly, it's almost like anything can really happen at this point. It's gotten very volatile. Silver's known to be volatile. And, given how it's behaved maybe in the last week, to see more spikes up or down wouldn't really be too surprising. I do actually hope that it gets to correct properly, sufficiently. I mean, I was just looking at a chart before we got on this call, Elijah, and, for silver's been quite overbought if you look at what we call the RSI on a technical chart. And so frankly, for it to correct, I think reasonably and get closer to its 200-day moving average, which would be a lot healthier, it would probably need to move down to the low 60s. So let's say $60, $62. And then I think that would be a reasonable correction. Would not be a huge surprise given where it was. That would be about a 20% correction from close to $80. And it's about another, say, 10% correction from where we are now. So again, that would be very helpful. It would adjust a lot of the sentiment. And I think that we could actually potentially see it move sideways from that level. There's the miners have done extremely well. They haven't quite followed to the same degree that with the same leverage that they normally would. So I think that there's still actually some fair degree of potential once silver sort of finds its footing and starts to climb again, that the stocks will start to properly leverage the silver price again. But it's been fantastic in the miners as well for the past year and a half.
Peter Krauth says silver is in a perfect storm, with heavy volatility in late 2025 and a possible 20% pullback into the low 60s. Unlike 2011, today's silver market faces real supply shortages, strong ETF demand, China export restrictions, and growing solar use. He expects silver could reach $90 to $100+ in the second half of 2026. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
A whole lot. I think that, the market to some degree probably has gotten ahead of itself in terms of sort of speculative buying and fear of missing out, some FOMO pushing this even higher. We can talk about all of the drivers, but I think those are the sort of the two main things that really got it really crazy volatile in the last few days. And we are seeing, as you said, a correction this morning. We're down to just under $72 last time I checked in terms of a spot price. So it's down about 9.5% from I believe at least yesterday or Friday's close. Closer to $80. So, that's what's going on right now. But there's certainly been a lot of drivers this year that have helped push silver up over about 150% just this calendar year alone, and has doubled really, in fact, in the last 4 months. So it's been some exciting times. And I think it's, we often talk perfect storm, but I think this is really perfect storm where everything has come together and really helped move silver way beyond what I frankly had been expecting. I'll be perfectly honest about that. I think what people need to do at this point is not rush, not jump in necessarily. If they own no silver, frankly, maybe buying even a little bit at $70, $72 wouldn't be necessarily a bad idea. I'm not saying, again, to go all in, but get your feet wet, own a little bit, and then continue to watch it. I think that given the kind of behavior we've had, and this is one of those parabolic rises, if you look over the last year or so, like I was saying earlier, correction to somewhere around the low 60s would not be a surprise. And I think that it would make sense to anyone who feels he doesn't have enough exposure to start accumulating more, around those levels. Honestly, I think that we're going to see probably higher highs than we've just seen at some point in 2026. So, if you look at the high mark around, say, $80 this year, give or take, I think we could see that repeated easily again at some point in the first half. And I think we could push closer to the 90s, even the triple digits in the second half of 2026. This is a really, really, truly tight market that I think that the observers and participants really didn't believe until recently. And I think that's going to continue to play out. We do not have a way to bring significantly more silver to market. And mine supply is tight. There's no meaningful growth, and yet demand is expected to exceed supply to the order on the order of about 10 to 15% at least this year, next year, for the next several years. And the Silver Institute forecasts record high deficits at some point over the next 5 years. So this is going to remain very, very tight. And yeah, I think it's a very, very different picture from 2011. I mean, all of these things are coming into play, but if you look at all of the drivers, there's things like sustained high industrial demand. We have an ongoing supply deficit. We have China that has decided back in October, right about when the silver price correction seemed to be finishing off. I think this was end of October. They said they were going to restrict exports, and that kicks in actually January 1st. So I think that a lot of that has started to be factored in. So that's not a surprise. These are the kinds of things that we've known about for a couple of months, and so you would expect that they've ultimately at least gotten baked into the price. But as those dates approach, I guess, the market gets more antsy about what the effects could be. And so I think that has also led to the volatility. There's also Chinese inventories that have come way, way, way down, since they peaked in early sort of late 2020, early 2021. Their silver stocks peaked. Secondary inventories have peaked. We saw that also in London. We saw it in New York. And so the market, if anybody, sort of has doubt about how tight the physical market actually is, I think that should erase those doubts. We always talk about, perhaps privately owned silver hoards. And I had been saying for the longest time that, sure, this can come to market and help alleviate supply issues, but I kept saying that this would only happen at much higher prices. Maybe we finally, I had said 65, 70 and beyond in terms of prices that it would take to see some of that silver come back to market. Maybe we're starting to see some of that happen now as well. So yeah, I don't see that happening. It really is a different market. 2011, I don't know specifically for that year, but we were looking at surpluses for the most part on average for, I'm going to say almost the 5 to 10 years prior to 2020. And, only as of then, we started to look at serious deficits in the silver supply. So that is what has made this market, so different from back then. We've seen industrial demand really just continue to just plow forward. We've seen the growth from solar, for example, has continued to plow forward. We talk about things like being worried about, substitution in things like electronics or in solar in particular. That's very, very, very difficult. I mean, even at these kinds of high prices, certainly the margins get squeezed for solar panel manufacturers, but they're still able to make a profit. Silver would have to almost double from here for the amount of silver going into a panel to really erase all of the profits for solar panel manufacturers. And, despite this talk about thrifting and the potential to switch over to something like copper, that's not something I've seen being proven sort of on the technological side. Instead, we're seeing a move towards higher consumption technologies for solar panels, things that take up to 50 to 150% more per panel of silver. So I don't see any sort of meaningful slowdown in terms of silver consumption. And this is an interesting point. If you look at the World Silver Survey back in that came out in April of this year, they had said that they expected net physical investment to be somewhere around 190 million ounces, and about 200 million ounces this year, and then they revised it down actually in November to about 189. So it's not huge. It's about maybe 20 million ounces less. It's really not. It's almost a rounding error at these levels. But what's interesting is the amount of silver flowing into silver ETFs. They thought that would amount to only about 70 million ounces. And I remember thinking, that sounds way off to me. We're going to be a lot closer to 180, 200 million ounces. And then when they put out the revisions in November, that was really the number that they came out with. So that they think that flows of silver into ETFs is going to be closer to 200 million ounces in 2025. I guess we kind of spoke about it in these last thoughts that volatility will continue. But if you look at the overall outlook, the setup going forward, geopolitics are not that favorable. The inflation outlook is not that favorable. Economically, things are looking challenging in terms of risk of recession, in terms of sustained high inflation. Something to keep in mind, Elijah, is look, before COVID hit, we were barely averaging about 2%. And central banks were desperate to get inflation up and kept rates at near zero for the longest time. And post-COVID, after this huge jump in inflation that went up to 9% in mid 2022 and then corrected back, we've been more like averaging 3%. So we're 50% above pre-COVID inflation. The Fed still talks about 2% being its target. We're 50% above that, and they're cutting rates. So I mean, this is like a game of chicken where they've caved, they've given in. They've said that they will sacrifice the dollar, they will sacrifice inflation, and they will instead look to support employment and the economy by keeping rates low, and the consumer will have to deal with higher prices. So as I say, the setup is there. If anybody thinks, they think that it's likely to play out differently, I'd like to hear about their reasoning for it. I can't. I've looked at this from many angles. I can't see why it wouldn't continue necessarily on that path. That doesn't mean precious metals move up, in this linear fashion, nice, straight, gradual climb. They will likely raise with volatility, but the bias will be to the upside. So you absolutely want to maintain some exposure. What's interesting too for people to keep in mind is that this odd period that we're in here, late December between Christmas and the New Year, and markets really opening up where people, big traders are off and away. This is always a risky time because volumes are much lower, and it's easier to push prices around much more quickly and much more dramatically. So I think that these are all sort of things to watch for. I think that you need to keep all of that in mind when you look at how the price can behave. The other markets, I think, are being pushed around in a similar way for similar reasons in terms of low volumes and dramatic recent gains. In fact. Gold, of course, has not had such dramatic gains in such a compact time as silver has. But my understanding, and I haven't watched as closely, but platinum and palladium have. Palladium, I think, in particular, has nearly equaled what silver has done in the last little while. So, there's some profit taking. There's volatility for low volumes. Again, these are all things to keep in mind. But we're talking about inflation hedges here and recognized safe havens, and so I don't see the picture changing in any way dramatically for these metals. These are metals that supply is ongoing in a very tight outlook in terms of a tight setup, and I think that we're expecting, for example, rates to continue falling. We're expecting a dovish a new Fed chair to come in and take over soon. So there's maybe some selling the news kind of thing going on. We had been buying the rumor. So there's some probably is a fair bit of profit taking right now. I don't think that the bottoms in these metals is much lower from where we are. Again, these are markets, these are assets that you want to at least have some exposure to.